I think they're taking advice on their exit strategy, but I think, and there have been some sort of joint venture asset management deals with particular banks and asset managers, but it hasn't been immediately apparent to me that they feel, even if they do need them, that they actually feel they need specialist asset management advice. I mean, they're taking advice from investment banks and other people on their exit strategies, how to package up the loans and what sort of portfolios, etc. I think where they're at sea, some of the more complex assets are probably accelerating the disposal process in some ways. But a lot depends on, again, what they've written the asset down to. And one of the anomalies is that even on slotting, they can still base that off their view of ultimate recoveries. It's still an inherently subjective process.
But there is a distinct difference between mandating an advisor or mandating a long-term asset manager.
Yeah.
I would say, in our experience, if banks intend to hold assets on their balance sheet, they normally have a tendency to also hold on to their own management and use their own internal teams and systems. There are, of course, exceptions to that, but that seems to be the general rule in Europe. So we see the involvement of asset managers like ourselves mainly as a part of a transaction where an investor, whether it's the US investors or any local investor, is actually acquiring the assets and then in the need of a specialized local asset manager at the same time.
I don't think they're short of people looking to pitch them advice and ideas on transactions, but I think they continue to be very cautious. As Eri says, they really are managing it out themselves. I think it's a long-term view that they've taken.